All right. Well, hi there, everybody. This is Morris from San Jose Options. And this is another really interesting discussion on the calendar spread. So, although many people think of this as just a positive Vega trade, you can actually use the calendar as a negative Vega trade. Okay, so really, the truth is it's always going to have a mathematical positive Vega because of its structure. However, it'll behave like it has negative Vega. So just want to clear that up. So let's take a look. How to use calendars after a debacle. Okay, so this is what I call a debacle calendar. Okay, now this can also be an earnings calendar. So it's kind of has the same type of effect here. Okay, so it's an earnings calendar, or it could be a debacle calendar. But let's talk about the debacle situation first. Okay, when we have a market debacle, or your underlying has a debacle itself, then what would typically happen is the volatility on your front month is going to move up faster and farther. Okay, so that's why I have this over here. You're looking at a pretty sharp increase in volatility short term. Okay, notice again here you have your front month volatility. Okay, the back month then is typically going to move up less and kind of at a slower pace. And then farther out in time, even less, and farther out in time, let's say this is really far out in time, like 3 years, a little bit less. Okay, so it moves almost, you could think of it like an earthquake in the epicenter. Okay, so over here you have your epicenter. Your volatility move is going to be much more dramatic, faster, shorter term, and it's just going to hit you, boom, it's just going to go way up and fast. And then the farther you're out in time, then it's going to move a little bit slower and move up a little bit less. Okay, and it'll drop kind of like that too. Now, as the underlying symbol calms down, then what happens is the front month does it again, it repeats. Okay, so again it drops down a lot faster. And then your back month here, it drops down less. It moved up less and sometimes delayed, I've noticed as well. And then it drops down a little bit slower and at times again delayed. If you study these, you may see that sometimes it's a day later, 2 days later. I've even seen up to like a 3-day reaction, which is kind of cool if you think about it, because it gives you like a crystal ball. Okay, so again over here you're looking at again farther out in time. So to summarize, they're going to move up a lot faster. Again, talking about volatility, it's going to go up a lot faster, and then it's going to come down a lot faster. So the way to take advantage of what I call a debacle calendar is when you have that debacle, then it's going to develop that skew. Okay, so again, your front month volatility goes way up. Your back month may go up as well. It may not. It may be delayed by a day or two. So the sooner you can get in there and capture that skew, you might get a better skew if you happen to enter the trade on that immediate, like the first or second day when that particular underlying has a fast move down. Okay, now obviously you have to think about long-term problems. If whatever the symbol is that you're trading, if it's looking at a long-term problem that might be crashing for a month or so, that's not what I'm talking about. I'm talking about these 1-day moves, okay, or 2-day quick moves, maybe on some news or things like that. Now, the way they work with earnings, again, it's very similar. So before earnings come out, your front month volatility climbs up, and it climbs up more than your back month. And so the same thing happens. That positive skew develops, you can actually do a calendar, looks like this, over earnings, and then the front month will drop, the volatility will drop, and then the trade can produce a profit, as long as it doesn't move too much up or down directionally. Okay, so really interesting. I always like to talk about this, but you know, the calendar, while it's known to be positive Vega, and technically, mathematically, it is positive Vega. Okay, so you can't say it's negative Vega. It's a positive Vega trade. However, the behavior of it is negative Vega in this type of situation. All right, thank you very much. And remember, SJ options.